After Nvidia's earnings report, we now have Crowdstrike. Now here the story is a bit different, right? Nvidia's expectations were quite high, they delivered, but the stock is currently down after hours. If you missed that video, it's going to be in the top right corner. With Crowdstrike, of course, all the attention was towards, well, the impact of that outage back in July. How big of an impact would it be in that quarter, plus a guidance? Well, actually for the quarter, a bit across the board. Guidance was hit, of course, they lowered the expectations as well, but right now at the time of making this video, the stock is up around 3 to 4% or so. Now, as you can see here, before they reported earnings, the expectations were that revenue would grow 31% or so year over year for this quarter. For next quarter, around 28.6% growth year over year. Now, of course, now we know that next quarter it's going to grow. It's going to be a bit less than that. Overall, for their fiscal year, they were expected to grow around 31% or so. Now growth is expected to be around 27%, 28%. I mean, despite the huge impact of that outage, or the presumed impact, growing 27% year over year, still quite good. Now, of course, we know this is not a cheap company, right? We know this is a market cap of $64.3 billion, but a forward PE of 65.7 times. Definitely not the cheapest out there. If you wanted to see even more valuation metrics, here is forward PE, EV to EBITDA, price to sales, price to free cash flow, and price earnings to growth. Yes, price earnings to growth is, let's say, a bit cheaper than all the rest here, sits just above 2, but all the rest, despite being down quite a lot still, I mean, the last 3 months, it's down close to 24% or so. Valuation-wise, yeah, it's still an issue, but then again, it has never been cheap. Even before, right? Even when it dropped 50% or so. Forward PE was 52.7 times. EV to EBITDA, 45.5 times. Price to sales, here 12.5 times. So it was always expensive no matter what. So let's have a look at what has happened during the quarter and let's hear what the management told us. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's start with a couple of comments here. So, working with customers to recover from the July 19th incident, we emerge as an even more resilient and even more customer-obsessed Crowdstrike, continuing to aggressively invest in innovation. Our second quarter demonstrates the resilience of our business and platform. Remember, some analysts already thought that that incident would impact the quarter. All right, so our second quarter demonstrates the resilience of our business and platform, with the three platforms here eclipsing $1 billion in combined ending ARR. In response to rising point product complexity and an elevated threat environment, organizations are increasingly focused on consolidating their cybersecurity vendors into a streamlined platform that delivers better security outcomes, which is CrowdStrike Falcon. Of course, we've heard this with every other company as well, SentinelOne, Palo Alto Networks, they all say the same thing. Our vision and mission of stopping breaches remains unchanged. Commenting on the company's financial results, the CFO said, "For the second quarter, we delivered strong growth in revenue, operating profit, and net income, demonstrating our focused execution. Our market opportunity remains unchanged, and we believe our continued commitment to customers and innovation will drive even more Falcon platform adoption, protecting our customers from rapidly evolving cyber threats and enabling us to achieve our long-term targets." And so, the quarter at a glance here, ending ARR grew 32% year over year to $3.86 billion. Net new ARR increased 11% year over year to $218 million. As for operating margin, was at 24%, up 2 percentage points year over year. Free cash flow was up 44% year over year to $272 million. Diluted earnings per share increased 41% to $1.04. And free cash flow margin and rule of 40, so free cash flow margin of 28%, rule of 40 of 60. As for the adoption of the Falcon platform, so we've got 65% of customers with 5 or more modules, 45% with 6 or more modules, 29% 7 or more, and 48% of the, well, this is representing ending ARR, over $100,000, 8 or more modules. Then, as we've seen before, so across all three platforms here, over $1 billion ending ARR for the quarter, that increased 85% year over year. Again, this is still amazing how fast this company is growing, And I mean, despite everything that has happened, growth is not really slowing down that much. And of course, the company is becoming more profitable over time. Now, this is still on a non-GAAP basis. So subscription gross profit increased 35% year over year. Diluted earnings per share increased 41%, operating income 46% year-over-year growth, and free cash flow, as we've seen before, 44% year-over-year growth. This is quarter and then first half of fiscal year 2025 as well. Overall, tremendous growth across the board. So, financial outlook. Crowdstrike is providing the following guidance for the fiscal third quarter and full fiscal year. Crowdstrike revenue guidance for the fiscal 2025 includes an estimated $30 million subscription revenue impact in each of the remaining fiscal quarters as a result of incentives related to our customer commitment package. In addition, fiscal 2025 revenue guidance includes an estimated impact in the high single-digit millions to professional services revenue in the second half of fiscal year 2025 as a result of incentives related to our customer commitment package. So, lowered guidance, and that, of course, is a miss based on analyst expectations. If you look at revenue, for the next quarter, it's not going to be over $1 billion, or at least that's the guidance right now. So lower than what we've seen before, but still, I mean, it's not such a big impact. But then again, when we listened to SentinelOne's earnings call and report yesterday, they basically told us already, look, even if customers want to change, it's going to take a while. It takes 9 to 12 months or so. They're not just going to leave CrowdStrike and leave their organization vulnerable. No, I don't think that will happen. So again, it remains to be seen what the long-term impacts will be of that outage. So total revenue between $979.2 and $984.7 million. For the full year, they expect $3.89 to $3.90 billion in revenue. And so right now, if we look at the stock did rebound close to 35% since the bottom here, that Black Monday, August 5th, up 35%. If you managed to time that bottom perfectly, congratulations to you. By the way, this is on the daily. If we switch here quickly to the weekly, we can see this RSI is low/neutral-ish. Overall, the stock right now sits at $268.5 after hours, which is just above the 20-day moving average. The 200-day one sits at $285.7 and the 50-day one at $289.5. So overall, pretty good quarter, I think. I mean, the expectations were quite low. Everybody was expecting a doomsday report. But no, the report was quite good. Guidance, yes, was a small miss. Okay, we saw this one coming. But the question now is it going to be just the next quarter in this fiscal year, or is it going to be a thing that will last for the next 12 months or so? I guess we're going to have to wait, right? 3 months from now, we're going to talk about this again and see if anything has improved or not improved at all. Remains to be seen. Of course, if something gets mentioned in the earnings call that makes or breaks the stock, check out the pinned comment. I will put it there. So overall, that's it. Do share your thoughts and opinions down in the comment section below. What did you think about the quarter? Let me know down there. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.